All right, so as we dive through the STR loophole and understanding everything you need to know about that, we are now going to talk about material participation. So what is material participation? Well, as I said, it is much easier to meet than real estate professional status. So you're out of those hard reps rules, but it does take some level of work. Now, material participation, it's a year-by-year thing. Same with reps. Like you could meet it 1 year, you could not meet it 1 year, right? But if you meet material participation on a short-term rental loophole, in that year, if the short-term rental has losses, you can use those losses to offset any active income that you may have. In order to meet material participation, there are 7 tests, and you only need to meet one of these tests. So in reps, you have to meet those 2 difficult tests. For material participation, there's 7 much easier tests, and you only need to meet one. Now, if you want to look into all 7, you can go chat GPT that and find out and dig through that. There are 2 main ones. I mean, a lot of the other 5 are kind of different takes on those 2 main ones. So for the purposes of this, I'm going to talk about the 2 main ones that most people go towards. Those are either they worked 100 hours and more than anybody else on the property, or they worked 500 hours in the property. Now, this is a year-by-year thing. So in year 1, if they work 100 hours and more than anyone else, they meet it. In year 1, if they meet 500 hours, or they work 500 hours in the property, they meet it. In year 2, if they don't meet it. But year 1 is what we're talking about. So let's stick with that. So those 2 rules, 100 hours more than anyone else, or 500 hours. That comes down to about 10 hours a week. That can get difficult again. So I think 500 hours, easy to understand what you would need to do. We'll talk about qualified activities and what goes into that, but I want to dig more into the 100 hours and more than anyone else. So the 100 hours and more than anyone else, it ends up being one of the easier options to meet for a lot of people. However, they really need to be careful about what they do because that more than anyone else becomes a real thing, especially under audit, right? So if you are using a property management company and that property management company is managing the property, finding tenants, doing all this stuff, you're going to need to make sure that you don't just work 100 hours in the property, but you work more than any one person from that management company. If you use a contractor to renovate it and that contractor works 200 hours in it, you're going to need to work more than them, right? So you have to be cognizant of this. You have to be cognizant of time logs and what you need to do to keep track of this. Now, one common thing that people will do is you want to talk closely and work closely with those other people that are working on the property, right? So if it is the property management company and they have multiple cleaners, again, this is a person by person thing. So maybe make sure that they're switching up who's cleaning that property. So instead of cleaner A working 200 hours, maybe cleaner A, B, and C all work 60, right? So that's kind of the way you can break that up a little bit. So you make sure you get your 100 hours, but no one else gets more than you. Now, 2 other things here. The one is that with short-term rentals, the spouse's hours can be combined. So if you work 100 hours and your wife works 100 hours, that's 200 hours, right? So it's all put together. That's not the same for reps. Reps works differently, but for short-term rentals and material participation, spouse's hours end up getting combined. So between you and your spouse, you need to work the 100 hours and more than anyone else. Or between you and your spouse, you need to work at least 500 hours. The second thing to know here is there's a way to group these activities together. So if you have multiple short-term rental investments that you have, and let's say you do actively participate in one, or you have 70 hours in one and 70 hours in the other, you can elect to combine those. Now you need to be working with an accountant who knows how to do that. It is a tax election on your tax return. It needs to be selected. If it's not, you under an audit, you will lose. So you need to make sure that grouping is met, is accurately reported. And also you need to understand any potential consequences that come with grouping those. So don't go do that alone. If you're doing this strategy at all, you should be using qualified CPAs, accountants, tax planners, but definitely if you're going to do some combining strategies, you want to be using a good qualified team on it. So now what activities qualify as qualified real estate activities? You're trying to get your 100 hours in more than anyone else. You're logging your time. What time will qualify? Well, the IRS, they lay this out pretty high level in what kinds of activities qualify. Development or redevelopment, acquisition or conversion, construction or reconstruction, renting or leasing, brokerage, and operations or management. Now, 2 big things there. One that's not in there is lending. So if you're a mortgage lender, if you're a mortgage broker, those do not qualify. When it talks about brokering, it is talking about an actual real estate brokerage that you're doing. So those are the hours that will qualify towards your material participation hours, is if they fall within one of those buckets. Those are pretty high level. So let's break them down to some examples. So advertising for the property, advertising for tenants, that time's going to count. Showing the property to people, showing it to potential tenants, right? Managing your tenants, all that time's going to count. Making sure you're signing contracts, you're in correspondence with different people, correspondence with contractors, managing the team, all of that time's going to count. If you're shopping for projects, if you're doing things like that, all that time's going to count as well. Overseeing property operations, supervising contractors and teams and projects, if you're shopping for different items for your short-term rental, like that is all time that counts. Now, bookkeeping, accounting, some financial reporting time, that that will count as well, but you need to be really cognizant about what you're doing and who's on your team and who you've hired to do other things, because they will look into that. Travel time gets very interesting. You need to be able to directly tie that travel time to the property and to say you are doing this directly for that property. We've been through audits where they disallowed travel time. It's really a case-by-case basis, and oftentimes they're going by what the most recent case law on it is. So I usually tell our clients, hey, meet it without the travel time. Go ahead and log your travel time. We need to do that anyways. Log that. But if you've worked 100 hours and 50 is plus 50 travel, let's break it out to where we have 100 plus 50. So if it goes under audit and they don't allow that 50, we're still good. Now keep in mind that all that admin, all that office time, all that sales time, that's all also going to be input in your time. So when you're logging your hours, when you're documenting things, when you're filing stuff, when you're getting things together, when you're getting it ready for tax time, that type of stuff, that's all time that you are spending on this. So be sure to detail that time. You should have a good log. Use your Google Sheet, use your spreadsheet. We've got a material participation log that will be available to any members of our community where you can download that and use that. There are a couple trackers, tracking type apps that you may be able to use too if you prefer that way, but you need to do it and you need to log it. A couple of items to be aware of on your time logs: education and research time. They are generally going to disallow this time. They do not consider it operations. So what they're going to say is, if you're like, well, I was driving around looking for properties, I was researching properties, I was putting together the numbers on these different properties, they are likely not going to take that time. If you're putting in your time for learning, watching these videos, getting that education that you need, they're going to be like, that's great for you as overall real estate, but it's not going to meet your material participation time. So beware of those more kind of white collar type items. They are not going to love those, and they probably are not going to count on your timesheet. So again, I kind of give people an ancillary. I'm like, hey, if you want to go put that down below under your, somewhere else just to keep track of it, great, but they probably are not going to allow that. So hopefully in video number 2 of our STR series here, you guys have more knowledge now of what you need to do to materially participate, and what qualifies as activities. You know how to keep your log, where to keep it, what to put on that, date, time, where you're at. You want to know all of that, keep your log, and what qualifies you to materially participate. So now let's go into, now that we know how to materially participate, follow along, because in the next videos, we're now going to talk about how we can really start to generate losses, amplify and accelerate those losses, and then really use them for actual, real significant tax savings.